Good morning. Welcome to the Mortgage Rate Forecast with Criss, your mortgage rates and news. It's May 24th. Let's get going to some charts. Here's what we have. Doesn't look like much movement today, but this is pretty big deal. As you can see, mortgage-backed securities are trading at about $102.13. This is down here. Remember from my previous recordings, we wanted to maintain $102.20. We are below that now. This is not really great for us. This means our new floor support is coming in at about 102 or even as low as 101.80. So 102 is here, 101.80 is here. So we could see some selling off. We have definitely more room for failure than we have room for growth. And we have this downward trading channel really pushing up against us. Our resistance is up above us at $102.30 now, so that's down. So not a really great outlook for bonds right now. The reports that are out, new home sales, that actually was better than expectations. You know, that did help bonds a little bit, but it wasn't enough to stop the bleeding. We had news come out. The Dow was up 200 points this morning, as you probably already saw. There was an oil rally, which isn't great for bonds, and the US dollar was rallying, doing really well. That's a sign of deflation, not inflation, which again, I'm sorry, a sign of inflation, not deflation, which again is not great for bonds. So to kind of quantify where we're at, Freddie Mac reported the average interest rate to be about 3.61, a little over half a point in April. We're currently trading about 23 cents worse than that. So that means the average consumer right now may be getting quotes for a similar rate at almost a point. So that's where we're at. Here's your forecast. The analysts are pretty consistent on the short term. 1 to 2 days out, they don't think there's going to be, you know, any kind of major movement, that we're going to be trading pretty flat. And there is some mixed reviews as far as some analysts are bullish on the long term, thinking that interest rates are going to get better. Other analysts are neutral, maybe with a little bit of bias toward a bullish on the long term, meaning that they think, some of the analysts think that the bonds may actually, interest rates may actually go up on the long term. So here's what I'm calling for. I'm forecasting for trading to be between $102 even. So I think we're going to really be testing that support, going back this support right here at $102 even. And I think that we're going to be trading for a while, at least until my next video on Tuesday, between 102 and 102.20. So long term, I'm still forecasting for lower mortgage rates after the June FOMC meeting. So I think there is you know, some light at the end of the tunnel, but you know, we'll have to wait and see. What do you guys think? Love to hear from you. Leave your comments down below. Let us know what you think is going to happen with mortgage-backed securities in the short or the long term, and why. So be sure to like the video before you guys go, and if it's your first time on the page, up here you can subscribe. I only do a couple videos a week, usually Tuesdays and Thursdays, and so you'll get a little alert when a new video comes out. And if none of this made sense to you, it's completely okay. Up at your top right, you'll see the little guy. Click that and that'll take you to Mortgage Bonds 101 and kind of give you the fundamentals of how mortgage-backed securities, the trading of these bad boys, impact you as a consumer that's thinking about getting a mortgage. Anyway, that's it for now. Take care. If I don't speak to you, have a great Memorial Day weekend, and we'll see you on Thursday. Take care.